Welcome everybody, and in this lecture we'll discuss so many sections. Yes, 6 deductions we are going to discuss. It may be 80GG, 80GGA, 80GGB, GGC, 80JJA, JJAA. So many sections. So listen carefully. Okay, start with 80GG. It talks about actually if you are paying a rent and if you are paying the rent of your residential house property and you are not in receipt of HRA, then where will you claim the rent as deduction? The answer is under section 80GG. So 80GG talks about deduction in relation to rent paid. Right? Now, to whom this section applies? Obviously, it will apply to individual because residential house will be maintained by individual. So it is applicable to individual. Whether he is a resident or not, citizen or not, doesn't matter. But it is applicable to resident individual. Oh, sorry, individual. Whether they are resident or not, citizen or not, doesn't matter. Okay. Now, he should not be in receipt of HRA. That's the first condition. So the individual is not a salaried person, or suppose even if he is a salaried person, he is not getting HRA from the company. Then in that case, and second point says he is not the owner of the property. He is not staying in the property which is owned by him or which is owned by his spouse or owned by his children or owned by HUF at the place of his employment or at the place of his business or profession. So at the place of his business or profession or at the place of his employment, he is not staying in his own property, his parental property, his family property. Okay. Now, he is not even holding any other self-occupied house property in any other place. Like under section 23 subsection 2a or under section 23 subsection 4a, they talk about occupation of property at other places other than from the place of employment, other than from the place of business or profession. But you don't have any self-occupied property in your name. You are not the owner of any other property in any other place. And you pay the rent and you submit 10BA form stating whatever rent you paid, giving the details of the rent paid. So if you satisfy these 4 conditions, then you are eligible to claim deduction of rent paid under section 80GG. Let me repeat for all of you. Hey, to whom this is applicable? Tell me with me. Repeat with me. Chal, it's applicable to individual. He may be resident or not. He may be citizen or not. Doesn't matter. Okay. Now, conditions. 4 conditions are there. First, not in receipt of HRA, not having own property at the place of employment or at the place of business or profession, not staying in own property of his spouse or HUF or children. He don't have any other house property in his name at any other place which is mentioned under section 23 subsection 2a or 23 subsection 4a. And while he paid the rent, he declared it in 10BA form of the income tax. Then he is eligible for claiming deduction. How much deduction? Minimum of the 3 is claimed as deduction. Now, when we talk about deduction, it is after the gross total income, correct? We all know. Because it is all about rent, we may get confused with HRA. HRA, whatever allowance we receive, we deduct the least of the 3. Only taxable portion we show in salary. But here it is deduction. So there is no such concept. Here only least of the 3 is deducted from gross total income. First, 5,000 per month. Second, 25% of adjusted total income. Third, rent paid minus 10% of adjusted total income. Again repeating, least of the three is allowed as deduction. First, 5,000 per month. Second, 25% of adjusted total income. Third, rent paid minus 10% of adjusted total income. Now, out of the three, what is the toughest thing to understand? What is adjusted total income is tough. Correct? Let's understand that now. Adjusted total income is very simple because you take gross total income. Once you take gross total income, from that deduct long-term capital gain. Deduct short-term capital gain under 111A. Deduct all deductions under 80C to 80U. Deductions under 80C to 80U. All you deduct. But other than 80GG. Other than 80GG. And lastly, you have to deduct incomes which are mentioned under section 115A, 115AB, 115AC. So once you deduct all this, you will finally get adjusted gross total income. Okay, this way it is computed. And once this is done, then we have to think. Sometimes what happens, employers give you rent-free accommodation to stay. Now you are not receiving HRA. You got accommodation to stay. And you paid rent to the employer himself. Okay, some small amount rent you paid. Now, while computing the rent-free accommodation as perquisite, the rent paid is deducted so that taxable rent-free accommodation can be computed. Not only that, but the rent whatever you paid to employer, you can claim deduction under 80GG. Whatever rent you paid, you claim deduction here. Okay. To claim deduction, again you have to follow all the rules. So shall we have a super fast revision of all this? Hey, 80GG talks about if you paid the rent without receiving HRA, then claim deduction under 80GG. To whom? Individual this section applies. It applies to individual who may be resident, may not be resident, may be citizen, may not be citizen, but individual is there, that's it. He'll claim deduction. Right? He's not receiving HRA, he don't have his own house property, and he paid the rent and showed it in 10BA form of Income Tax Act. Then deduction is least of the following three. Rent 5,000 per month. Second one is 25% of adjusted total income. Adjusted gross total income. Third one is rent paid minus 10% of adjusted gross total income. Are you able to understand? Very good. Next thing I wanted to tell you, adjusted gross total income is very easy. Take gross total income. You compute gross total income normally. Then take that gross total income. From that, deduct the long-term capital gain. Whether it is 112, 112, doesn't matter. All long-term capital gains deduct. Short-term capital gain, only 111A short-term capital gain deduct. Deductions under 80C to 80U other than 80GG deducted. Other than 80GG. Okay, deducted. Then incomes which are mentioned under 115A, 115AB, 115AC, deduct that. You will get adjusted gross total income. Now, this adjusted gross total income, you have to multiply with 25%. You have to multiply with 10% in C. Like that, if you do, you will be able to solve the problem. Last thing, if you are actually receiving rent-free accommodation from the employer, I'm not talking about HRA, I'm talking about rent-free accommodation you receive. In that case, if you are paying some concessional rent, that is deductible while computing the perquisite of rent-free accommodation. And finally, whatever rent is there paid, you can claim under 80GG as deduction. That's it. Now come to 80GG section. Now here this is not much important from exams. So what we'll do, we'll have a glance at it, right? 80GGA talks about scientific research. So if you are giving donations to scientific research, then you will get deduction under 80GGA. But now you may say, Sir, if we are donating to scientific research, under section 35 we get deduction. Then why again 80 GGA? I'll tell you, don't worry, relax. What happens is, if you are a business assessor, then you will claim deduction for donations to scientific research under section 35. So if you are a business assessee, if you are donating for scientific research, then you will claim deduction under section 35. But if you are not a business assessee, you are a salaried person and you are giving donations to scientific research, then for that purpose, this 80 GGA section is brought. That's why when they wrote applicability, first line itself tells that this section is applicable to all assessees other than assessees earning income from profits and gains of business or profession. It's applicable to all assessees other than people who are earning income under profits and gains of business or profession. Done? Very good. So because PGBP income holders claim deduction under 35, others claim under 80 GGA. That's it. Okay. To claim deduction, on what matters you can claim deduction? One is rural development. So suppose you are giving donation to any approved association, an approved institution, for any approved rural development program, then you will get the deduction. You may be giving training for rural development also. You may be giving training to the people in rural area, maybe for self-employment, maybe for entrepreneurship. Then also you can get the deduction under section 80 GGA. So this is all about rural development. Second one is poverty eradication. Now, central government runs urban poverty eradication program. So if it is a notified urban poverty eradication program and you are donating to such program, such institution who is uh, working in the areas of urban poverty eradication program, then obviously you can claim deduction under 80 GGA. Third thing, if you are contributing to scientific research. Fourth is you are contributing to statistical research, right? Or you are contributing to any social research, social or statistical research, right? Or you are contributing to other purposes, any projects which are approved by national committee, right? If you are donating, many a times public sector companies, local authorities, approved associations take up projects which are approved by national committee. In that case, you will get deduction. So remember, under 80 GGA, 5 items. One is rural development program. Second is, first is what? Rural development program. Second is urban poverty eradication program. Third is scientific research. Fourth is social and statistical research. And fifth is other purposes is given in side heading. But remember, any project approved by national committee. This way you should remember. Right? How much deduction? Obviously, 100% of the amount donated, you will get deduction. But here there is a catch. They said, if you are donating up to rupees 2000, then you donate anyway, your choice. It may be in cash, it may be account pay check, no problem. You will get deduction. But the payment should be up to rupees 2000. Payment should be up to rupees 2000. Then you can even pay in cash and still get the deduction. But if the payment is more than 2000 rupees, if the payment is more than 2000 rupees, in that case, you have to pay through account pay check. You have to pay through demand draft. You have to pay through electronic mode. Then only you will get the deduction. Suppose I'll ask a question to you. I paid 10,000 rupees in cash for scientific research. Can I get deduction? The answer is no. Why? Because for cash, max limit is 2000 rupees. Okay. Further payments, only through banking channel, right? And once you make the contribution as per these rules, 100% of the amount is claimed as deduction. Clear? Very good. Now, you contributed to some institution, you contributed to some association, but later on, government withdrawn its approval. Maybe they are not using their money properly, right? There are many, right? So, if the government withdrawn their approval, your deduction will not be withdrawn. So, you will still continue to get the deduction. Wait, don't understand it in wrong sense, right? You donated, you got the deduction. Later on, the approval was withdrawn. Now your deduction will not be reversed. Okay? You will still continue to enjoy that deduction. But after the approval is withdrawn, now you contribute. You will not get deduction under 80GGA. Okay? After withdrawal of approval, if you donate, you will not get deduction. This way you are supposed to remember. Okay. Now I will tell you there are two sections which are quite common. One is 80GGB and one is 80GGC. Both talk about donations to the political parties. So if you are giving any donations to the political parties, you will get deduction under 80GGA, sorry, GGB or 80GGC. Okay. Who will get deduction under 80GGB? Indian companies. So under 80GGB, Indian company will get the deduction. And under 80GGC, any SSE, it can be any SSE other than artificial juridical person or a local authority. That means local authority will never get deduction. Okay, because local authorities are managed by government. So how can they give donation to any political party? So local authorities are completely prohibited from giving donations to political parties, right? And artificial juridical person also cannot give any donations. Like you know or don't know, but artificial juridical person means Hindu deities. These are artificial juridical person. Universities are artificial juridical person. These cannot give donations. Okay. So 80GGB says Indian company will get the deduction. 80GGC says 80GGC says any SSE other than artificial juridical person or local authority will get deduction. For what? Donations to the political party or to the electoral trust or maybe purchasing electoral bonds also. They will get the deduction. How much? Whatever they paid, that much. That means 100% of the amount paid can be claimed as deduction. What I said, 100% of the amount paid can be claimed as deduction. Clear to all of you? Well, but can we pay in cash? In 80GGB or GGC, can we pay in cash? The answer is no. Even a single rupee also you should pay through a banking channel to claim the deduction. If you pay in cash, then you will not get deduction. Okay? There is a difference between 80GGA versus GGB and GGC. GGA is scientific research. So up to 2000 cash is allowed. But more than that, obviously through account paycheck. But in GGB, GGC, it's all about political parties, correct? So that's why no cash payment entertained for claiming deduction. So GGB talks about donation by Indian company. GGC talks about donation by any SSE other than artificial juridical person and local authority. You give donation to political party, electoral trust, electoral bonds, you will get the deduction. 100% of the amount paid can be claimed as deduction. Now, let's come to next section, that is 80JJA. 80JJA says that you are doing some wonderful thing. the best thing in the world. I truly appreciate these people, right? Because the whole world, everybody believes in creating waste, either because people don't have a choice, or even if they can skip, they create waste. But these are the people who do the waste recycling, and these people should truly get the benefit of deduction, right? So, till now, whatever we discussed, 80C to 80GGC, correct? All were based on payments. So, if you make the payment, you will get deduction. If you make the investment, you will get the deduction. But 80JJA is special. JJA says you earn income, will give deduction. Okay? So, how this section works? 80JJA is applicable to all assets. 80JJA is applicable to all assets. There is no restriction. Whether you are an individual or a company, no problem. You will get deduction under 80JJA. But what you are supposed to do? You have to collect. You have to process. What are the two words I said? Collect, process. The biodegradable waste. You have to collect, you have to process the biodegradable waste. And then out of that, you have to generate power, electricity. You have to generate something called as biofertilizers, biopesticides, biogas, pellets, right? Briquettes, organic manure you can create, or any biological agents you can create. If you do this, then whatever income you earned, 100% of the income is allowed as deduction. 100% of the income is allowed as deduction. So if you earned 100 crores, you get 100 crores deduction under this section. But there is a limitation. Deduction is allowed only for the first 5 years. Deduction is allowed only for the first 5 years. So only for 5 years this deduction is allowed. So what 80JJA talks about? It talks about that this section is applicable to all assets, right? It is actually those assessees who are engaged in collecting and processing biodegradable waste. It may be something like cow dung. It may be some vegetables waste, correct? Or many things like that. So what you are doing, you are collecting and generating biodegradable, bio is that, right? Biodegradable waste. And what you are doing, you are generating power. You are generating biofertilizers, biopesticides, biogas. You are creating pellets. You are creating briquettes. You are creating organic manure or any other biological agent which are useful. Then 100% of the amount earned, income based deduction it is. So 100% of the income earned I am saying, okay, is claimed as deduction. But this deduction can be claimed for first 5 years of the business. But shall I tell you one thing? Yes. The point is, suppose you start as a partnership, then claim the deduction for 5 years. Then convert the partnership into LLP. Again claim for 5 years. Convert the LLP into company and again claim the deduction for 5 years. Convert the company into firm again. Then claim the deduction for 5 years. You are perfectly allowed to do so. Government did not restrict. Of course, yeah, these people are warriors of environment. So these people should be promoted. Okay. Shall we go to the next section? And that is 80JJAA. I am talking about which section? 80JJAA. Now, this section is applicable to all assessees who are subject to tax audit. Under section 44AB, you are subject to tax audit. So this section is applicable to all assessees. but who are subject to tax audit only. So suppose for you tax audit is not applicable, then you cannot take the benefit of this section. But for you, if tax audit is applicable, then you can enjoy the benefit of this section. So here you pay salary. Now, when you pay salary under section 37, you claim deduction or not? Of course, under section 37, we claim deduction. But you are allowed to claim additional deduction under section 80JJAA. Of course, government want to promote employment, right? Industries should employ more and more people. So industry or businesses should be given incentives to hire new employees. And for that purpose, this section 80JJAA is brought. So this section is in relation to wages paid to the additional employees. It's applicable to all assessees who are subject to tax audit under section 44AB. Now what this section says? That the business should be new business. So who will get the deduction under 80JJAA? If it is a new business. That means if you have split the existing business, like Hero Honda became Hero separate, Honda separate. If it is splitting, then no, not allowed. Right? It should be completely new business. Maybe reconstruction you did. Maybe you renamed your business. Right? So no, that is also not allowed. So if you rename and again want to claim the deduction, no. You should start a new business to claim the deduction. Or suppose you continued your business and you sold it to some other person. Now that person want to claim deduction under 80JJA. Can he claim? It is not a new business, correct? It's an existing business which has been transferred, reorganized, right? LLP converted to company. So these type of things happen. They will not get deduction. So it should be completely new business. It should not be some whitewash. It should not be window dressing. Then only you will get the deduction. Of course, if tax audit under 44AB is applicable, so obviously under point number 3, audit by a chartered accountant will be conducted, correct, of the books of accounts. Then when audit is conducted, you should submit the report that how many additional employees are employed in the current previous year. How many additional employees are employed in the current previous year. Give the data at least 1 month before filing returns. At least 1 month filing before filing returns. Okay. So audit should be conducted and a report should be submitted at least 1 month before. And claim the deduction in the return. So if you are filing income tax return, claim the deduction. If you don't claim, no deduction. Right? If you don't ask, nobody will help. So similarly, if you claim the deduction, if you show it in your income tax return, right, under deductions under 80 JJAA, then you will get the deduction, right? So you have to furnish the data and to claim the deduction. Okay. How much deduction is given? We understood. We understood that it should be new business. It should not be splitting, reconstruction, reorganization. You should completely do the audit. Submit the report of the new wages, new employees appointed at least 1 month before filing returns. In the return, you claim the deduction. Then you will be eligible to claim deduction under 80JJA. How much? 30% of the wages paid is allowed as deduction. Right? And you can claim the deduction for 3 years only. 30% of the wages paid, you can claim deduction, but only for 3 years. Now you may feel bad, sir, if I pay wage of suppose 20,000 rupees and only 30%, only 6,000 I can claim deduction. Are you don't understand what I said. Are already you paid 20,000 salary, correct? So under section 37, you claimed 20,000 deduction. Here you are getting 6,000 extra. So you are not getting 100% deduction. You are not getting 30% deduction. You are getting 130% deduction actually. 100% under section 37 and 30% under 80 JJAA. But that 37 will continue till you pay salaries, right? Till you incur certain expenditure which are eligible to be claimed deduction there. But 80 JJAA, you can claim deduction only for 3 years. So 30% of the additional emoluments paid, that too for 3 years, you can claim deduction. Now, what is an additional employee? Suppose if it's a new business, additional employees are those employees which are on payroll on the 31st March of the previous year. Those employees which are on payroll on 31st March of the previous year. Right? Because it was 0 employees first. All are hired because it's a new company, new business. So that's why on 31st March, whoever are on payroll, they are treated as additional employees. But in subsequent years, what happens? That you may hire new employees. So the employees at the end of the previous year minus employees at the start of the previous year. This is called as additional employees. Okay, these are called as additional employees. Like that we'll do when we solve numerical problem. Okay, but I will tell you one thing. Please carefully listen. Suppose if it's an existing business, no new employee is hired, right? No new employee is hired. Or you paid salary in cash to the new employee, then you will not get the deduction, right? Salary should be paid through banking channel only to claim the deduction. That's what we learned, right? And new employees should be hired to claim the deduction. Okay. But suppose if the salary of the employee is more than 25,000, salary of the employee is more than 25,000, right? All emoluments together. If salary is more than 25,000, they are not treated as additional employees, right? Salary is more than 25,000, they are not treated as additional employees. So for them, no deduction. For such employees, no deduction will be given to employer. Here, employers hire the employee, correct? So employers get a deduction under 80 JJA. But if the salary of employee is more than 25,000, employer will not get deduction. If suppose salary of the employee is paid by the central government through the Employees Provident Fund and Miscellaneous Provisions Act 1952. 1952. So if central government is paying the pension, then definitely you will not get deduction under 80 JJAA. Or suppose the employee in the current year worked for less than 240 days. Then also deduction to the employer is not given because employee worked for less than 240 days. Or suppose if it is a textile industry, if it is a leather industry, if it is textile industry, if it is leather industry, if it is footwear industry, if it is a textile industry, leather industry, textile products, leather products, footwear. In these three cases, 240 is replaced by 150. In these three cases, 240, 240 is replaced by 150. Is replaced by 150. That means if they work for less than 150 days, no deduction. Clear to all of you? Very good. Now, If suppose some employee is not covered by Employees Provident Fund Act, then he may be getting something called as pension under the NPS, right? So that contribution under the NPS or contribution to the retirement corpus, like example to the gratuity he receives, superannuation fund amount he receives, such type of things, no deduction allowed here. So very simple section. Quickly we try to understand. Let me recap for you. We are talking about 80JJAA. It's applicable to all assessees, but other than those who are covered by, no, wait. It's applicable to all assessees who are actually subject to tax audit under section 4480. All assessees it is applicable who are subject to tax audit under 4480. Right? Now, new business should be there to claim the deduction. Splitting up, reconstruction, reorganization not allowed. So after reorganization, after splitting up, after reconstruction, the entities cannot claim deduction. So it should be new business, right? Ultimately, audit should also be done. Additional employee data should be submitted at least in the form of a report 1 month before filing returns. And in the returns, you should claim the deduction. Then deduction is 30%. Please remember under section 37, salaries is deductible. 100% it is deductible there. Here you are getting 30%, but only for additional employees. Whatever you paid to additional employees, that emoluments into 30%. And that too you will get deduction for 3 years only. Now, if it is a new business, at the end of first previous year, how many employees are there? All are additional employees. Suppose it is a existing business, then employees at the end of the previous year minus at the start of the previous year are additional employees. This way you are supposed to remember. Now, in an existing business, if no new employees are hired or additional employees are paid in cash, then under 80JJAA, forget, you don't get deduction. If the salary of employees is more than 25,000, employee worked for less than 240 days, or if it is a leather product, leather industry, textile industry, or footwear industry, less than 150 days the employee worked, then no deduction for such employees in that particular year. If next year he works for the full year, then he'll get the deduction. Or next year he works for more than 240 or more than 150, he'll get full deduction. Right? Full means 30% of the additional wages. Okay. So next year he will be treated as additional employee hire. Okay. And if you are not covered by the employees provident fund, right? Okay. If central government pays the pension or salary, then you will not get the deduction under 80JJAA. And if you are not covered by Employees Provident Fund Miscellaneous Provisions Act, then your NPS contribution or your retirement benefits are not treated as emoluments. Okay, this way you have to understand. With this, we completed the entire concept till 80JJAA. We'll solve some problems and then we'll go to further concepts. Okay, bye everybody. Take care.